Welcome to Venture Node. We are a Web3 community of founders who are looking to learn from each other by speaking to people who are currently in the trenches of their own venture. My name is Adrian. I have a background in fintech and have become more involved in the technical side of crypto over the past couple of years. I started this podcast in order to fill the gap in early stage projects exposure and learn from some really amazing founders. Join us today with our guest coming from Trade Mango, which is now known as Lightning Swap. James, you can go ahead and introduce yourself.
Hey, thanks. I'm James Andrew. I'm founder and technical director at Global Liquidity, where we have been working in the realm of trading of one sort or another, bringing a new way of trading to the market in the crypto world for about 3.5 years now. And I'm excited to talk about what we're doing right now.
Awesome. I know you have a super interesting background. You were originally working in high frequency trading, which eventually led you into some more technical roles and then going into VR and now transitioning into digital assets. And so I know you were involved in some of the very earliest stages of high frequency trading. Just for reference, I read a book that I really enjoyed, which was Flash Boys. And I know in Flash Boys, they mentioned a piece of software that was built in around 2014. And I noticed that this software has very similar functionality to things that you were working on in the very early 2000s.
Yeah.
So you were definitely extremely early in high frequency trading. Maybe you can talk a little bit about your experience in that space.
Yeah, high frequency trading was not a Google term at the time. I was one of the first people to do it. If you really want to get a good history of the space, there's a really great book called Dark Pools, and I think Scott Patterson, I forget what his name is. Dark Pools it's called, and it's a really great summary of the history of what you might call the first wave of electronic trading. That's the overall terminology I like to use. It's electronic trading, whether it was back then on NASDAQ or today on Uniswap even. It's all electronic trading of some sort, or Trade Mango. So I got involved in this early on in like 1997 or so. I basically just met someone and he was older and had banking connections, and he decided he wanted to start doing this and help me get set up with a trading account. And before you know it, I was on Wall Street, like literally on 100 Wall Street, running a trading floor with like 50 traders. And it was so exciting back then. It was right during the .com era, and all of this was very new because it was only for about a year or so that anyone that was not someone from like Morgan Stanley or JP Morgan would actually get their hands on a keyboard and play at that like high speed trading game, which was occupied mostly by market makers. And so it was exciting. I would get in there at 7 o'clock, boot up all the systems. It was almost like a huge video arcade of trading. And so the market would open, we'd have CNBC on all over, and all day people would be yelling and screaming, and generally a lot of times having a good time because the market was moving a lot. And then as soon as the market would close, within 5 minutes, I would go back and boot up the Quake servers or the Counter-Strike servers, and we would be playing FPS shooters for another like 2 hours. Like 50 people. It was amazing. So that was then after that, I ended up doing the same thing for a national trading operation. It was called Andover Brokerage at 24 trading floors. And I was running the whole thing in terms of actually making sure the trades were done, like operating the whole thing. I didn't own it, but I was operating it because I had brought them their software. Long story about, I brought them this custom software package that we had been working on at this other place that I was at, and ended up doing this deal with them to deliver it to all of their offices with zero downtime. It was on one computer. They're like, all right, we got to deliver this to 24 offices, do all this, that are trading on this to 10% of NASDAQ volume, just go. And we did it. And it was exciting. It was like air traffic control. And then right after that point, myself and my business partner at the time said, well, what could we do next? And we realized we should automate this. So we actually built a language called Mercury Trading Language, MTL, that allowed you for the first time to script out instructions for what to do in the order book. And because of our position on Wall Street, like right there, hooked into all the major lines, which at the time were NASDAQ, Island, Instinet, Bloomberg, Archipelago, etc., we had the highest speed access to all of this. And so while we built the language, I spent a month trying to find, by sitting at a computer, something that I could do repeatedly with my hands, that if only I could automate it, it would make a ton of money. And I realized that I could bid on a slower market And every once in a while I would get hit, but that market would be 10 cents lower or 10 cents outside of the main market. So if Intel was at 25.50, I would bid over here at this market at 25.40. And when someone hit me, it was like putting a fishing lure in. And when someone hit me, I could then trigger a buy. I found later that this is like a delta neutral strategy. This is hedging. What I was doing is hedging my risk that's coming in from this order flow over here by immediately selling on the faster exchange called Island that I had a fiber optic line into. And the short of it is it worked. It worked, and it started just siphoning money a little bit at a time out of the market because I was providing this service of what I called liquidity routing. I did this for a few years profitably, but it wasn't so scalable at the time that I was making so much money that I didn't need to keep building this. But while I should say it was at the time not scaled to where it could be. I ended up getting in. Some of my business partners at the time did some very bad things, Wall Street stories. I left Wall Street without really having anything to show for it, but having a lot of good experiences about going through that. And that was how I got involved in trading. And then I guess I'll bring us up right up to where we are now, which was then I did a number of things for many years, worked at a video surveillance company, but most particularly in 2013, I got the first Oculus Rift, one of those, and started developing virtual reality games and ended up being a VR creator and technical director for a large VR company in New York. And that was up till 2017 when I discovered crypto and decided to bring my trading experience to the crypto world. And I'll pause there because that's a lot.
Well, I think that's a good overview of a lot of your experience, especially in high frequency trading. And I know you mentioned that, of course, like the market dynamics in the early 2000s, due to the fact that this was just the very beginning of all the technology getting involved in Wall Street. And of course, like having an opportunity like that where you could bid on a slower exchange and have like a 10-cent spread, like that's huge, right? Like that doesn't happen anymore. So what are the differences in market dynamics in the early 2000s in terms of market opportunities in comparison to today when you have way more competitors who maybe all have fiber optic cables to these exchanges, and really the differences and competition is much more difficult?
Yeah, it's a really interesting question. And I would say that it's fundamentally changed in the crypto world, particularly the dynamics, because as you refer to, those kind of opportunities in the regular world were largely taken up by high frequency trading firms that would do things like I was doing at a much larger scale and just eating up all of the arbitrages that are available to where there's really not much more opportunity there. And they did this how? They did this by extreme centralization. So if you look at any market like the NASDAQ or the New York Stock Exchange, they actually exist as a data center somewhere. And so New York Stock Exchange and NASDAQ are largely making their money by renting rack space in a building so that you can all be at the same place and at a fair playing on a fair playing field and not at a disadvantage relative to your peers, because all your trading like algorithms are running there. Co-location, big business. Equinix is a big company that's involved in this. But along comes crypto and everything's different. Everything's very different. Why? First off, you can't centralize because now there's just this proliferation of liquidity pools all over the world. And even in the world of centralized exchanges, you've got Binance over here, which is in Japan. Binance's data centers are actually in Japan. They're in Tokyo, AP Northeast 1, unless they've moved them lately. And every exchange is in another data center. So the requirements for addressing all of this liquidity in a performant way are actually very different. And it's kind of a problem that hasn't been solved yet. And that's why we have a lot of fragmentation of liquidity all over the place and only a really few professional institutions that are equipped even to be able to play that game of optimizing the system, which is inherently flawed in some ways. And I'm hoping and planning to fix this with some things that I'm working on.
Right. And would you say that because I know a lot of these crypto exchanges now, like including, Binance, FTX, they have their own arms that are specifically dedicated to actually doing some of this high frequency trading themselves in order to maybe have better prices on their own exchange or to take advantage of that profit making opportunity. Is that something, would you say that's a major difference to some of the traditional markets? I know you said, for example, with NASDAQ, they rent out a lot of the server space near their trading engines so that everyone can have equal access, all the high frequency traders, and they don't really maybe participate in it directly. But a lot of
Yeah.
these cryptocurrency exchanges do. Would you say that's like a major difference?
I would actually say that that is more of a similarity than a difference if you step back, because what I see in both the traditional markets and in the crypto world is you still have a small number of people that have privileged access to this level of interaction with the market. And on the other end, you have what you call retail traders or users who are generally, whenever they're interacting with the market, at a disadvantage, largely because they don't have the same tools and connectivity and know-how that a small group at the top does have.
Hmm. And I know something you mentioned on some of the Trade Mango documentation. Was that something that's similar to Solana compared to some of these traditional exchanges? Is that so? There's an exchange called IEX, the Investors Exchange, and basically their goal was to combat people's being able, these high frequency traders being able to extract as much value from people's trades as possible. And you mentioned in the documentation for Trade Mango that this is kind of similar to Solana because Solana kind of has this built-in speed bump with the block time in terms of people being able to get their orders in. So it completely changes the dynamics in the markets in terms of the available opportunities and also with all of the different decentralized exchanges. So I thought that was very interesting. Maybe you have something to like add on to that.
Yeah, you bring up a really good point about the IEX and the way that they've attempted to introduce. For anyone who doesn't know, IEX has this system where they have introduced a speed bump. So no matter how fast you are, everyone sort of is at a similar, has a more fair playing field because the speed is rate limited. But there's also there's a lot of sentiment on Wall Street that this is not a good idea and that it's not really, I don't think it really is taken off like they expected it. It's not the new trading model for planet Earth. And I think that it is not, I think that a good principle here is that a faster trading system, all other things being equal, will win. And this is super important. And here's why. We've got to get a little sort of theoretical here, and that, not theoretical, but we have to go back to first principles here. And one way I like to look at it is I like to say that trading sits uniquely at the intersection of information theory and game theory. And what I mean by this is, what does information theory have to do with? Information theory, which was created by Claude Shannon, is all about the study of information channels and how efficiently you can deliver information. And there's something called the Shannon limit. And that's the most that you can possibly send, the most information you can send over a given channel. And what is trading? That's information theory. Trading has at one hand to do with the propagation of information. And so since events happen in particular places and times, that historically those that have had a greater ability to know what was happening first generally would win in a situation. In fact, the history is that the history of Western Union is there was a time in the late 1800s that Western Union was largely being used, the telegraph, to transmit the results of horse races, so that people could bet ahead of others that didn't know about it. And likewise, I just saw a documentary the other day on the History Channel documentary. It was called Engineering That Made the World, I think, Engineering That Built the World. And there's an episode in there about the laying of the transatlantic cable for the first time. It was some guy's idea. Let's just take a cable all the way from England to America. And why? The first business on that was prices to synchronize the exchange in London and the US. That's what they wanted to send, because not knowing meant that you couldn't trade, you see, until you knew. So faster's better. And so I actually think that this is why, for instance, Solana has a leg up on automated market makers. That look what happens with things like Uniswap. I propose that they're really only historically exist because of the nature of Ethereum and that it was slow, that people said, what's the best we can do here? And it's done like really amazingly for what it is, and it is useful, but it will never beat a central limit order book based system. And that central limit order book system needs to be as fast as possible because of this idea of the intersection between information theory and game theory. What I mean by this is that traders are employing game theory. That is, they are competing over a limited resource. So if information of that resource, if the information about events relating to that resource can be received or transmitted and received faster to a group of traders so that they're more informed more quickly, that exchange is a superior exchange to an exchange that puts in any sort of artificial delay or that has a delay necessary in it, even if it's only a 400 millisecond delay at best due to block time synchronization. And so I've been working on a model that I believe will address this, and maybe we'll talk about that later. But fast is good with trading, and fast wins generally.
Yeah. I think that's really interesting because, I think a lot of people have started to realize that over time, that although the Uniswap AMMs are cool, and, there's a lot of innovation that I guess can happen there, like with Uniswap v3, different things like that. It's not necessarily ever going to replace like these central limit order books. And I think that's why we're seeing so much demand for even these these exchanges that pop up on these other chains off of Ethereum. And then they just take off because there's so much pent up demand for that. People want like a decentralized as it can be version of one of those order book based exchanges.
Totally.
Yeah. So I know that you moved from high frequency trading to VR. So what makes you so excited about VR? I know that that's like probably, it seems like a passion of yours.
Well, I'll tell you, I am less excited presently about VR in terms of a near-term business prospect than I was in 2014. There was a lot of hype about how the devices were going to progress, et cetera. And it's kind of stuck in this optima of being like cool, but not cool enough for mass adoption. And so I'm actually I decided some years ago that I think probably AR is what's more is the thing that's going to be more impactful in most people's lives. It may be that VR is always sort of a very niche thing that you do once in a while. I don't want to walk around with a thing on my head all day. I mean, I've done that. It's kind of a unique novelty. It's particularly fun in the context of demoing something to people, and you have a line of people and they're all watching someone do this thing. But that's not like practical for every day, right? But AR is actually a very big deal. And here's why that we are using these 3D technologies in our application is I actually believe that pretty soon you're going to need to use these technologies because we're going to be getting these devices soon from Apple and others that exist as some form of glasses. And what they're going to do is you're going to look around and you're going to see what is essentially like floating objects of various sorts, what you'd call composited, much like a lot of times you'll see this on intros to movies where they'll put the titling right in there. It's like it happened about 10 years ago. They start doing it all the time where the title looks like it's embedded right into the scene. It looks part of it. And it's even blocked by like the fence, the lamppost or whatever. Apps are going to need to do that real time. And you're going to need 3D for that. And so we are working on a technology stack that is prepared for what's going to happen in about 2 to 3 years.
Got it. Yeah, and I completely agree too. I'm someone I'm a big fan of VR personally. Like I bought some of the Oculus Quest headsets and different things like that, and I absolutely love it. I think it's amazing. It always blows my mind every time I use it. But I completely agree. Even no matter how good it can get, I feel like I wouldn't want to do it for more than maybe an hour or so. And really having the integration into real life with AR, I think is a completely different prospect than a complete immersion in something like VR. But I would say that especially in the past couple of years or so, VR has been in the news all the time, and the whole like metaverse narrative has been all over the place. Which I think is interesting because I think people just it was more a realization of what was already there than actual technology that's just breaking through now, because you have these platforms like Roblox, or any of these Minecraft, any of these metaverses, and they've been around forever, but it's just now people are realizing and like putting a term to it for something that's already kind of been there since maybe 2014 or a little bit earlier. So I know that trading interfaces is something that you wanted to work on with Mango Swap. Trade Mango before you moved to Lightning Swap. So why is it so important that trading interfaces evolve, and what makes the current traditional trading interfaces bad?
Okay, good question. I think it's a good time I can switch to my desktop here. This is Trade Mango, what we've been working on for a while, and what we are temporarily pivoting away from, at least in its current form, to what we're going to talk about in a minute. But I'll show this for now because it answers your question. This is Trade Mango, and what we're working to do here is to move away from, if we look at a traditional trading interface, they don't have, first off, they don't have any sound, and they don't have any really like visual representation of the market or what's going on when you're actually placing the order. And this is fundamentally like really, I think, a real pain to use and a problem to use. So this is what we've been working on. First off, we've got this 3D window in here, which shows the order book in 3D live. So this is actually giving you a geometric representation of the supply and the demand. So the idea is that I think that people will interact better with something like this, where you actually see what's happening rather than just reading a bunch of numbers that represent what's happening. It's not just about the 3D interface, is that we actually make it easier to trade as a maker. So rather than as a taker, and what that means is, rather than just taking liquidity from the exchange and paying the high fee, in this case, well, it's not that super high here, it's 5 basis points, but if you can trade as a maker, you actually can earn a rebate. And these numbers can be significant, because when you're trading at 20x leverage on Mango, the fees and the rebates are on the leveraged amount. So it's actually quite a bit. The fee is actually 2% of your capital, and the rebate is 1.5%.
I think, that's a really important point to make, is that a lot of these interfaces haven't improved in quite a while in terms of, I think it's really cool to have the 3D dynamics with the order book, and then also the sounds and everything like that, but also just the ability for average traders to be a market maker is absolutely, like, I don't understand why exchanges haven't implemented that already. I guess there are some reasons for it, but I think it's important that people should look at market making as a serious thing, because at the end of the day, while the fees might seem nominal for the average trader, it does add up over time, and that's how these exchanges and other traders can make a substantial amount of money from you. So I think it's important that people understand like the importance of market making. And also, I know that there's another feature for like iceberg orders too. So if you want to fill a larger order, then it can break it into smaller pieces and wait for it to get filled over time. And I believe that would also be with limit orders as well, so that you're still market making. But something that I know is really interesting about your story is that Trade Mango was this interface that you started with, building on Mango markets. But then as you were building Trade Mango, this one feature came up, which you can talk about in just a second, which is now called Lightning Swap. And once you started building out Lightning Swap, you actually realized that Lightning Swap was maybe more interesting, at least at the current moment, than the rest of the Trade Mango products itself. And I think this is a really interesting thing, because a lot of founders might come across this themselves, where they're building a specific product, but then they stumble across something that actually ends up becoming their entire business unintentionally. So maybe you can talk about how you stumbled across Lightning Swap, what it is, and why it's so important.
Yeah, so down in Miami a couple of weeks ago, we brought trade down there to the hackathon, and we were hacking on this feature that we added, which made it way easier to onboard onto a Mango Markets trading account, because normally you need to actually have a Phantom wallet, you need to have Solana in it, or you need to have USDC in it that you've already gotten somewhere, and then you need to know how to transfer that into your account. So it's all this stuff. And so what we did is we hacked together a solution to this that that looks like this. Right up at the top here, we have this deposit button, and we say how much do we want, like $5, $10, or up. It could be a lot more, but we're just using these levels for demoing. And we hit buy, and then what it does is it pops up a QR code, and this QR code can be scanned with any phone-based app like Cashapp or Strike that supports the Bitcoin Lightning LNUR protocol. And more apps do. And more of these apps don't even require you to be someone that holds Bitcoin or knows about it. You just have the app. Like, for instance, with Strike, you could just connect your debit card. Cashapp is very similar. Now what I'm going to do is I'm going to scan the QR code right here, and I'm going to put in my PIN because you have to approve the transaction. And check out how fast this is. When I hit pay, so I'm going to hit right here. Let's see if I can get my finger. I'm going to hit pay. I hit pay. It's paying. And now our server is going to detect that we have paid. And our server is then, since it knows we've gotten those sats into our account, it is now transferring to the user's wallet the tokens, right? And now that it did that, it's doing another step of triggering the user's local environment to trigger a deposit of those funds into the Mango account, which is at 4287 right now. And in a moment here, so deposit was complete. And look, there we've got 4767 in our account. And even with the delay, that's not that bad. We were just able to scan a QR code, and now we have $47.68 to trade, whereas before we had $5 less. And that was Lightning Bridge. And we demoed this in Miami, and the response to this was so great that both from users and also from people that want to fund this, that we realized, wow, we've really hit on something here. Let's take this really seriously and figure out what this is. And so what we've decided to do is it's more of a new user experience than a pivot, really, that we are bringing all of the stuff I've shown here to the world as something we call Lightning Swap, which is going to give a much, much more simplified interface for just swapping tokens from Bitcoin and Lightning, using Lightning, to any various destination.
Yeah, I think a lot of people in the crypto space, right? You have this community of DeFi builders, smart contract builders, and they're on a lot of these platforms. Most of them are EVM based, and they don't really look at what's going on in the Bitcoin community too much. And I think this is definitely even seen within myself. Whenever I heard about this idea and what you were building, I was kind of like, I need to research Bitcoin Lightning a bit more. I need to see what's going on with everything relating to Lightning, because it wasn't really something that I was too aware or involved in. And I think a lot of other builders are in the same pool, kind of. So I think that this kind of represents, right, Bitcoin has the most adoption out of any cryptocurrency in terms of payments and in terms of being kind of like you mentioned, like the Swift, or Bitcoin Lightning being the Swift network that can be the underlying network for these payments. And Bitcoin has the most adoption out of any cryptocurrency, right? So it makes it the right one to use. And then you have these apps like Cashapp, Strike, that are making it extremely easy for users to get into Bitcoin and to get into Bitcoin Lightning. And so I think that this infrastructure to deposit into any cryptocurrency through Bitcoin Lightning kind of connects the two worlds together. It connects the innovation and the adoption in Bitcoin, and connects it to all of the innovation and building that's been happening in DeFi and on these smart contract chains. So that being said,
well said.
So how does this work in the back end in terms of getting that Bitcoin Lightning from someone sending it on Cash App to depositing onto Trade Mango or a different DeFi application?
There's two parts to that question. The first is, how does it work now when we are going to market with it? And then what is my vision for how it will eventually work? And the way that it works now is that we are managing you have cloud-based workflows that are just managing the workflow. If you think about the block diagram of all the parts of that we just saw there when I deposited, we are receiving a payment. We ultimately need to send funds of some sort in some currency or other, in that case, Solana, to a wallet whose address we know. So currently we have to do this custodially, but I call it minimally custodially because it's like trusting a vending machine, right? As long as you get the money instantly, that's why the speed is important. I believe customers won't really mind at first from the user experience that what we're doing on the back end is, check this out. We actually have, I can talk about all this now. We actually have a number of relationships with liquidity pools that names who you know, that one of which, at least right now, and the others to follow, allow us to use Lightning via API to deposit and withdraw from our own professional trading account. So what that means is the moment you saw in the video when you can see my finger touch it, and just a moment later, this app that has no connection to my phone other than the Lightning Network was processing the transaction. That means that with that small amount of time, we can actually execute at minimum a market order and just pay the fee to be a taker, so that we are minimizing our risk of the price that we quote being different from the price that we actually get to very, very minimal. And we're showing the user the whole process. You're seeing, here's your order. We got it that fast. And so it's the speed of Lightning that enables us to minimize our risk here. So so far, any questions so far about that idea?
Yeah, no, I think it's also important to mention that, because some people might say, well, why can't someone just go on Coinbase and kind of do this process themselves? But I think they underestimate the complexity to the average user, because as you're explaining this process, like there's so many different intermediary steps. And although it happens extremely quickly on an automated process, for someone who has never used Solana before, setting up a wallet, depositing on different exchanges, withdrawing, then going to the website directly to then deposit, connect their wallet, everything. It's super complicated. So I guess that you can segue and then continue the explanation.
That's a great observation. That's exactly right. We're not doing anything brand new. What we're doing is packaging up into a super easy, almost like video game style interface, this complexity that anybody can tackle. And people like you and I probably like to tackle this stuff at one level, but a lot of people just never will. And that is presenting a ceiling to the use of crypto in general now. And yeah, I want to talk a little bit about this idea of the future. I said I was going to talk about where I picture this going. See, right now, there is presently no protocol level bridge or link between Bitcoin and Solana, or Bitcoin and ETH, or Ethereum through ETH, or any of these other chains. That's why you'll notice if you look at any of these various projects out there, like Portal Bridge or any of these different projects that swap one thing for another, you're never seeing, you're generally seeing things within the crypto ecosystem. And but what we're doing here is and even if you're going to trade Bitcoin or something related to Bitcoin on one of these exchanges like Mango, it's always some like representation of it, because there's no real first class link right now. But it turns out that a link can be made, and it's through something called an HTLC, a hash time lock contract. This was actually built into, let me see if I can find this. Yeah, there at the bottom. This is in the original paper that described and specified the Lightning Network. And at the bottom there's this use case. And look what it says. Use case, cross-chain payments. So long as, see, a lot of people didn't read this part, even in the Bitcoin community, because they're not thinking too much about connecting to other chains. But here it is. Cross-chain payments. So long as there are similar hash functions across chains, it's possible for transactions to be routed over multiple chains with different consensus rules. The sender does not have to trust or even know about the other chains, even the destination chain. Similarly, the receiver does not have to know anything about the sender's chain or anything or any other chain. All the receiver cares about is a conditional payment upon knowledge of a secret on their chain. All right, so what we have here in the Lightning white paper is this idea that Lightning was always meant to be a tool for doing cross-chain payments. It was in there, but it's never really been implemented at a large scale, except for in the case of Litecoin a little while ago. Someone did that. And then more recently, someone did it also for Stacks. And they actually implemented what this HTLC contract, which exists as a smart contract on Stacks. And what that means is you're able to send a Lightning payment, which is transmitted non-custodially to Stacks. That is, it is an atomic swap, which means that the trade either fully goes through or it doesn't go through at all. So you do not have to hold the coins or hold the value in between, but currently you still have to rely upon an external oracle for the price. But at least people have been experimenting with this idea of a protocol level link between Bitcoin and therefore fiat and other chains. So what I'm looking at doing with Lightning Bridge, this thing that we're working on next as part of this, is to implement these bridges between Bitcoin and other chains, starting with Solana, that's the best one so far because it's fast, and it's just, and there's a lot of apps on it. There's a real sweet spot there, but we can do this all over. And the idea is eventually that the goal would be to distribute some sort of software that exists so that people could run this in a distributed fashion, and they could host their own Lightning bridge, right? And they could put liquidity into this by staking some amount of Bitcoin and essentially host trading for one or more pairs on their own node. And now imagine if you have, and it's not just hobbyists, I'm not talking about just hobbyists, people even of larger institutional size could do this, where what you could have here is what I hope and I see as the next step for exchange technology, which I call the polycentric exchange or the polycentric distributed exchange. So instead of having a DEX that requires that the order book be synchronized all over on so every order needs to actually be synchronized globally. We see what kind of a bloat that causes on Solana, and especially as you've got that game theory kicking in, you've got people trying to like hammer their orders with thousands of orders. It's a problem. And so the idea is you elevate these orders off of the chain and off of, and what you do is you make every node, you make this software that allows, it's almost like how BitTorrent allows for file sharing. What if you had software that would allow for trading of instruments such that when a new one comes online, the traders have access to all of these, right? You see all of them, but when you go to trade a certain pair, you're actually trading on a centralized exchange, so you get the speed, because you really want the speed on that pair that you're trading particularly. And so the idea is that Lightning Swap, which we're building now, is our first application to help us flesh out Lightning Bridge, so that later on, rather than just sourcing liquidity externally, we can embed a matching engine into each Lightning bridge and say, we're open for business for market making. But in order for that to happen, we need really to have Taro, however you pronounce it, go live, which is this new protocol that was announced recently by Lightning Labs. That is very exciting, I think, because it's going to allow for digital asset issuance on the Bitcoin blockchain and transferable via Lightning. So you'll be able to make like Bitcoin native tokens, such as stable tokens, and you could even make tokens, for instance, that wrap other tokens. So you could wrap them on the Bitcoin Lightning side, which means that you could essentially stake tokens of a particular blockchain into a contract, thus unlocking a certain amount of wrapped tokens on the Bitcoin chain, so that the trading for the tokens can be done on the Bitcoin native side with the speed of Lightning. No need to synchronize across the order book all over, because each node is a standalone exchange, sort of loosely coordinated into this network that I also have a plan of having a sense of reputation in the network, so that global liquidity is looking to be something like what the NASD was, where you would have to be a member to trade in it. Like we may be providing NFTs to the servers that show that the server is a server in good standing and should be trusted. So it's not just pure anarchy out there, but anyone can start an exchange. That's the idea. Anyone can start an exchange, and that's what we're hopefully going to be bringing to the world eventually.
Okay, and I think it seems it's definitely very complex from the outside looking in terms of the long-term vision, right? I think it's much more approachable the way the current way that you have it right now, in terms of just one party kind of connected directly to an exchange, and then it gets routed through there and then sent directly to the wallet of the user on the specific dApp or platform. So I think that's a good like visualization in terms of how the process works. And then long term, you want to transition that more into a decentralized manner or a more trustless manner through all these nodes directly on Bitcoin Lightning, involving the Bitcoin network, using the Taro asset issuance, and also having these nodes. And essentially, for the viewers, right, the nodes are basically like on a traditional AMM, you have someone who's a liquidity provider, so they provide both sides of the asset. Would that be a little bit the same way in terms of what these nodes would be for the Lightning Swap network or the Lightning bridges?
Not exactly. The way they would work here is a node which would be distributed primarily as a Umbrel node, probably first. Umbrel is a distributed, it's a platform for that makes it really easy to run a Bitcoin Lightning node. But the general idea is that instead of putting funds into a contract which exists on the chain, you're essentially opening up for business a trading venue that is facilitating and running a matching engine, which is like the core of what an exchange is, a thing that matches the orders, and which allows market makers to bid and offer. And the exchange is the one guaranteeing that that will happen, and extracting value from it just by being the host, because the host will receive the bulk of the trading fees after you rebate the maker. So the way you pitch it to a node operator is you turn this on, and the more trading volume that you get, you're just earning by having this computer there running. And of course, the question comes up of how do you guarantee that the computers stay on, that this isn't a hobbyist that's going to turn them off. And we're working on ways to incentivize that. You need to be able to incentivize that. But what's great is because these nodes are also Lightning nodes, they're also nodes that can send and receive these payments. In other words, we don't need to exit the system to pay each other like in the centralized world. The rails are right there. So every transaction that occurs is settled using Bitcoin Lightning instantly. And so that's why I feel that Lightning is shaping up to be, with Taro, the ideal rails for a globally scalable trading network that could really replace the old ways of doing things.
And so I wonder, when you're talking about these technologies in terms of Lightning and the Taro asset issuance on Bitcoin, I know even when I was doing some research into integrating Lightning into different development aspects, you'll see a lot of these warnings like Lightning is in very early stages, use at your own risk. And I think that's interesting because then you have like these platforms like Cashapp and Strike, which use Lightning anyway. So would you say that Lightning is still kind of like an early stage technology that can be high risk at times? Or what's the stage in terms of like the maturity of this technology? And if someone did want to, for example, use Lightning to deposit $2 million, $10 million onto an exchange, like should they be worried about that? Or what would be the view on that?
These are great questions. I think that Lightning was early technology a little while ago, but part of what got me really excited about going this direction was getting a front row seat through Clubhouse, actually, during the audio app that everyone in crypto went on during lockdown, pretty much. I got a close look at the progress that was happening in Lightning, because I would join the rooms, and everyone, Lightning Labs, the company who is chiefly behind pushing the technology of Lightning, they create the software LND that most people use, although it is open source. I saw this progress, and I said, "Wait a minute! This is the happening thing here. This is really coming together." And so I started working with it first through a provider called OpenNode. OpenNode is a provider. It's like a Shopify almost. Basically it's a Lightning payment processor that allow you to just drop it into your code, and then you can pop up QR codes. I can tell you, Adrian, that in all of my time working with developing, if I look on Lightning, I probably just in testing, sometimes would do maybe 50, 100 transactions a day, just I'm testing. I've never had a transaction fail, ever, due to the Lightning network. Now, I was using OpenNode, which meant that they had the infrastructure behind it, but that's just I've never have had one fail. It works so well right now as long as you have liquidity. And that brings up another point, that you need to run a Lightning node. You need to have Bitcoin staked on that node in its most base case to open a channel. Like you and I could both go download Umbrel, and we could install Lightning nodes, and we can install the Lightning node that comes with it. And then I could say, hey, here's my node ID and here's your node ID. We could swap them, and we could create a channel. And if you're going to do it that way and build up from scratch, there's a lot to be concerned about, because you can only send a certain amount through the channel. But there's a lot of infrastructure that has come online. For instance, Lightning Labs has something called Lightning Loop and LN Pool, which are essentially liquidity providing services, so that as you scale up to those bigger sizes that you're talking about, you can be sure that you could be able to take the transaction. Now, to be clear, I'm not looking, I think the sweet spot here isn't yet in moving $10 million chunks. I'll tell you that OpenNode, for example, it can support, they claim to be able to clear up to 5 BTC on a single transaction today. And so that's pretty good right now. But I'm not sure how it is above that, but that infrastructure is coming in. There are hundreds of people running Lightning nodes and networking together. There's one called PlebNet that hundreds or maybe thousands of people are on it now that are providing liquidity. So there's a massive amount of innovation in Lightning right now. And so I'm comfortable enough to be with it to base my business around it, as Kraken and other exchanges have been betting upon it to add with deposit withdrawal features to their exchanges.
Right. So the technology itself, you could maybe say, is stable and is maturing at a very fast pace, but maybe the liquidity for people who are going to do like $100 million transactions, that might come down the line, but that just comes with adoption. And as people kind of understand the maturity and the stability of the technology itself. So I think it's just a process of adoption.
Yeah, and I will, that is a good observation. However, I will say I don't think that the usefulness of Bitcoin as a money transfer mechanism is going away. In other words, the sweet spot of Lightning is to be able to move funds real fast. So if Lightning is swift, then we still have Bitcoin, which is sort of like the gold. So a $10 million transaction, you might want to actually do that movement of via the UTXO layer of doing the Bitcoin transaction. It's still there.
Right. It makes more sense to pay more and have the slower times for the additional security for larger transactions. But then for smaller transactions, especially maybe on something like initially on Lightning Swap for users who are just getting into DeFi or are just wanting to deposit maybe a couple $1,000s onto something like Mango Markets, it makes much more sense for them to have the ease of use of just having a transaction go through instantly using the Lightning Network. And Bitcoin for everything else. So I think that's,
I was sort of joking with my wife yesterday about this, saying, what we could say is we're actually in the business of saving lives. I said, how are we in the business of saving lives? I said, well, just think of all the stress everyone goes through waiting for 10-20-minute transactions and all the elevated heart rates out there. If you just sum all that up and we can give you a fun, easy, like actually an endorphin rushing experience of a quick transfer, I think that that's going to be good for the overall health of the people around me.
Right. Yeah. And I think people will slowly start to come to this understanding over time of, having speed and convenience versus paying more and having slower times for maybe more secure transactions. And I think that's something we're already seeing on other chains like Ethereum as well, because now people are starting to move over to the rollups and to layer 2s. And then the big money is still staying on the main Ethereum chain, because if you're sending $1 million transaction, it makes sense if you have to pay, a $10 transfer fee or something. But if you're sending $100, it might be much more expensive percentage wise.
Yes, exactly.
So with all of this exciting innovation with Lightning Swap and the Lightning bridges, like at what stage are you currently at in your rollout process, and where do you see yourself in the next year or so?
Yeah, we've just begun. I've just directed my development team actually this morning to focus all our efforts on the Lightning Swap interface, which wraps up all that fancy trade stuff in the back end. We're still using it all, including Mango Markets itself for hedging purposes, but the super simple interface, we have begun working on that today. And our goal is to have a working demo of that in the next 2 weeks. Not a demo, but something that works, like actually works. And then along the way, we're working on a lot of other things related to regulatory issues like KYC, AML compliance, things like that. And so that's the thing that might be the thing which limits us going live more even than the technology. So the plan over the next 3 to 6 months is to present this to the world as a site called lightningswap.com, which we just got. I couldn't believe it was available, but lightningswap.com, it just needs to exist, right? So hopefully we'll do a good job of bringing it to existence. And that's like in the next 3 to 6 months. And then after that, which we didn't really even talk about today, the idea is to take our Lightning Swap functionality and to wrap it up into a Chrome extension that acts like a wallet that allows you to use the same easy QR code scanning, even to purchase an NFT with one scan. But it's the same technology, it's just instead of the swap page, it's the Lightning Swap wallet, which will hopefully bring this from the realm of currency exchange to the realm of payment processing and make it super easy for people to buy and sell NFTs and participate in other things in Web3. And that will be like what we're going to do starting in 6 months from now to the rest of the year.
Yeah, it sounds super exciting. And I wonder too, like I know you mentioned the regulatory process. I know that's probably going to be fairly complicated. And that actually might be a reason why the nodes and the increased decentralization will be something, to focus on as well. But I wonder, like, what's your rollout plan in terms of integrating, like, with just Mango Markets first, or are you going to trying to be doing this just through a standalone website, like you mentioned, lightningswap.com?
Yeah.
Like, how will the interface work in terms of the
Yeah.
very early product?
It's going to be something, it's going to be like a lot of swap interfaces where you have the from and the to, but the difference is the from is going to be just a QR code scan of a certain amount. So it's always from or to. And then we're going to animate the whole process. So we're going to use our 3-dimensional UI to create a fully transparent experience of the workflow as it happens. Like you scan the QR code, we will show a representation of us actually filling that order. So you see where that you got your order filled. It's like your own little trading drone that's taking all of that stuff we were doing for trade and just doing it for you, but letting you see the process. And so you're going to see scan the QR code, and we're going to show how we're simultaneously trying to fill the order and then send the result to your wallet. And then we will detect that it's in the wallet and let you know that you've got it. If it doesn't make it to your wallet because there's a problem with the network, we retry. In other words, we stay with you until that transaction is complete, and hopefully make you feel like it's a fun experience to watch and not scary. And you feel like you had this sense of agency in making it happen. That's the goal for the experience.
Got it. And there's a question that we like to ask every one of our guests who come onto the podcast, and that is, I know with your story, you have so much industry experience. You have a lot of experience in high frequency trading, even with like very early stage innovation, and then moving into VR. So you've started so many different projects and worked on so many different things. What advice do you have for founders that you wish you would have known, like when you started, or even whenever you set out on the Trade Mango,
Yeah.
or now Lightning Swap project, or even with your previous projects that you've worked on? Like what advice do you have for founders who maybe want to get into building something?
Yeah, I would put a little caveat to this advice is that I am still a founder that has not succeeded yet in terms of, I'm not saying this from a perspective of resting on any laurels of, look, I've built this amazing thing and now and I succeeded. However, I do think that I'm on that pathway, and this is sort of related to the advice that I would give. I've learned more and more to listen to the feedback I get from the market and those around me, and not to be so in love with a particular idea that I want to put out there because it's cool, as it were, and rather to just be very, very practical and pragmatic with recognizing that there's actually something over here that you should move to, and just be very nimble at doing that. And so if you look at like the history of this company, I've been working very hard to find the product market fit for this general technology. And it's taken a long time, but I think a lot of other people would have given up. And also a shout out to all my wonderful investors who might be seeing this, who have been patient with me and seeing this process of trying to find that fit. So it's basically, hopefully we will look back at this video from a perspective of wonderful success of Lightning Swap and Lightning Bridge. And I can say, see, my advice to be very nimble and just be ready to pivot to something else worked, because that's what I've been doing and I'm still doing. So it's with some humility that I say this, because like I say, I haven't succeeded yet.
Right. In such a rapidly evolving industry, in crypto, there's a new technology that can completely change everything that pops up every single day. So you never know what's going to happen, and you never know where you're going to end up in terms of what you're building or what you become interested in. I also know with your vast high frequency trading experience in the past, I wonder if you also have any advice for any like potential market makers in crypto, or I wonder, that's something that I threw in, but I thought maybe you could have an interesting perspective on it.
Well, just pay attention to it, and pay attention to particularly these decentralized protocols, because I believe it's going to win. I believe that this space that we're in right now, that we're talking about, that's right at the edge of like asset issuance on Bitcoin and in new forms of trading. I believe that there's something really important here. So if I were a market maker, I would put a little more attention into this space than maybe even the numbers in terms of the volumes would indicate is wise, because it really is the leading edge of the technology of exchange. So pay attention to it.
Yeah, definitely. And I think a lot of people, they get a little bit caught up with just looking at the traditional AMMs, and they think that those are maybe the only opportunities or the only things that they really learn about in terms of where they can find market making opportunities. But then you do have a lot of projects that are either coming up or have already launched, such as Lightning Swap and Lightning Bridge, that are
Yeah.
going to offer these very unique and different opportunities than what's already out there. And those are, I think, probably the places to look when it comes to being able to find a lot of these market making opportunities.
I think so. Well said. That sounds good to
Awesome.
me.
Well, okay, so I think Lightning Swap, the Lightning
Awesome.
Bridge, everything you're building sounds super interesting. So for people who maybe want to get more involved, learn more about it, or they're waiting for the launch, where can they learn more and follow along with your journey?
Yeah, we are right now hurrying to put up a site at lightningswap.com. So very soon we're going to have a site up there, Lightning Swap. I'm also on Twitter. I'm Pixel Router on Twitter, Pixel Router. I'm Pixel Router on Twitter, PIXELROUTER. So a lot of my communication is through that lately. And those are the two things.
Perfect. So I guess people can reach out to you on Twitter and then also look out for the website, and we'll try to leave as many links as possible in the description down below. If you enjoyed this episode of Venture Node, make sure to like and subscribe on all platforms, Spotify, YouTube, Apple Podcasts, everywhere else where you watch podcasts. James, thank you so much for coming on. I think this was an amazing episode, an amazing discussion of super interesting, very exciting technology that's all coming very soon.
Awesome. Thank you so much for having me. This is an awesome conversation. You asked excellent questions.